We've all gone through this. We made some sales, we have some money in the bank. A bill comes, you pay it. Another bill comes, and you're like, oh my God, I don't have money to pay it. What happened? This is because revenue does not equal profit. Now, this week we've been going through the metrics you need to be looking at your business to ensure that you are reviewing it correctly. You understand exactly what's happening in your business. Today we're talking about money. Now, revenue is equals to sales. What is sales? Any money coming into the business. Then you need to deduct what we call costs of sales or cost of service. This is the cost of doing business. If it's money you're using to buy goods, direct expenses like distribution, direct expenses like direct labor. Then after that's when we understand this is our gross profit. Now, outside of gross profit, we have to also deduct indirect expenses. What are these? Salaries, marketing, rent, electricity, etc. These are the things now we deduct as direct expenses. Therefore, we get what is called a net profit. It doesn't end there. You have to deduct things like bank interest if you have loans. You have to deduct depreciation because your things are losing value. All those are things that accountants do, especially things like amortization. It's important to get an accountant. Thereafter, we get what is called net profit after interest and tax. Now, after that, we need to still separate the money we need to plow back into the business so that it expands. And then now what we are keeping, which we can use for dividend or for buying assets. Now, if you don't have this picture in mind, you will not be able to ask for the right financial statements. Now, the right financial statements you should be getting from your accountant at least monthly should be your profit and loss statement, which is this format I have just taken you through. Then what we call a cash flow statement. A cash flow statement shows the money coming in and out of your business. Why is it important? Sometimes your P&L tells you you're profitable, but if your clients pay you late, that will not show. You will see it in your cash flow statement. So you could be profitable on paper, but your cash broke, which is very, very risky. Another thing you need to be looking at is stocks. If you don't have a cash flow statement, you will not be able to detect that stock is either being stolen or you have the incorrect amount of stock. So you need to compare that against also what is called a balance sheet. So those documents are very critical, and a trial balance which tells you if the documents are correct. These four are critical, including your debtors and creditors aging, especially if you're in a business where you use credit a lot. If you are not asking for this by 5th of every month from your accountant, you will be held back by lack of knowledge. And your business is at risk of collapsing if you do not have this in your mind. Now, if you don't know how to interpret these documents, you don't need to be an accountant, by the way. If you don't know how to interpret them, get someone who will teach you. And if you want someone to help you transform your business or change a few things that you're not able to figure out, talk to us today. We're only taking 2 clients this month because we really don't have capacity for too many, and we're going to be working through their financials, working through their business, their processes, their people, just to make sure that they're able to turn around and become profitable this year. So this year, even if you're not our client, we really hope that you're able to transform your business and become profitable, even in this economic situation. Good day.